My point is the stress that we are seeing is through deliveries. And the deliveries, whether they be sovereign nations like China or India or Saudi Arabia or Russia or any of these main powers, or the most well-informed, well-funded traders here in North America, they're all prioritizing physical delivery over paper promises. And that's putting huge strain on a market that arguably is wickedly rehypothecated, meaning these contracts are sold over and over and over again. At that level, do you really think that these people do it just for the heck of it, or do they know something that maybe we all would like to know? At that level, I would argue they're not doing it just for the heck of it. So to me, that's really what I see. Huge deliveries painting a theme of something much bigger, I think, than what the mainstream media would tell us to expect or to believe.
In January 2026, the precious metals market has reached a historic fever pitch. This isn't just a typical price rally, it's a structural run on physical metal as record-breaking COMEX deliveries. Michael Widmer, head of metals research at Bank of America, pointed out that the current gold-to-silver ratio is approximately 49-1, while historical extreme lows were 32-1 in 2011 and 14-1 in 1980. A reversion of the ratio towards these historical lows implies that the silver price could surge to a range between $135 and $309 per ounce. Joining us to break down this chaos is Andy Schectman, founder and CEO of Miles Franklin Precious Metals, who has spent 35 years tracking these markets. In this discussion, Andy reveals why the world's most well-funded sovereign powers and traders are suddenly abandoning paper promises for physical possession. He explains how the massive rehypothecation of gold and silver contracts has created a Madoff-style risk, where paper claims far outnumber the actual metal available. Is the paper market finally collapsing under the weight of real demand? Stay tuned to find out what these insiders know that the mainstream media isn't telling you. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Well, I mean, as far as precious metals are concerned, which is, I focus on precious metals, but I focus on the why. And to me, the why is screaming precious metals, and screaming it in a way that we've never seen before. In my career, I've been doing this for 35 years, and the majority of the time that I've been doing this, in fact, all the time that I've been doing this, with the exception of the last several, maybe year, 15 months, to a degree, has, and what I mean, I'll explain what I mean by to a degree, but no one in my world, in terms of COMEX, the futures contracts, ever stood for delivery. Less than 1% of contracts ever stood for delivery. And since November of last year, when President Trump won the election, the amount of deliveries is so startling to me. From a macro perspective, Elizabeth, that's all you need to see. I'll give you an example. In December, just a hair under 65 million ounces of silver were issued and stopped, meaning delivered. Someone took possession of it. Now, not all of it leaves COMEX. A good chunk of it does. Some of it will stay in what's called an eligible account, which is an account inside the COMEX ecosystem, but it's not for sale. It just means those bars are eligible should they be moved to registered. But my point is this was the largest amount of silver ever delivered in a December in the history of the COMEX, going back to 1974. A mint box of Silver Eagles is 500 ounces, weighs 42 pounds. Who's buying 65 million ounces? But this is not a one-off. This is every single month for the last 15 months. 3.7 million ounces of gold in December, standing for delivery. You put this together, you're in the billions of dollars, but this has been every single month, billions and billions and billions and billions and billions every month for 15 months. And not only is no one really talking about it, I've been screaming about it on the mainstream, but at this level, you're talking the most well-funded, well-informed traders on the planet are prioritizing physical possession over paper promises in an environment where that was never the case, less than 1%. And the same thing is true in London, where you're seeing massive deliveries coming off the exchange that is putting them to a degree, I would argue, in an existential threat. They are a T+1 settlement market. T trade day plus 1 to settle. On the third day, the bar should be moving. For the last year, they've been telling us, well, the Bank of England is having a hard time coming up with trucks and extra manpower. It's about T plus 8 weeks. So
Okay.
you want me to believe that the Bank of England can't come up with enough in the way of trucks or manpower to move my bars? And you're telling me 8 weeks. My point is the stress that we are seeing is through deliveries. And the deliveries, whether they be sovereign nations like China or India or Saudi Arabia or Russia or any of these main powers largely in the global south, or the most well-informed, well-funded traders here in North America, they're all prioritizing physical delivery over paper promises. And that's putting huge strain on a market that arguably is wickedly rehypothecated, meaning these contracts are sold over and over and over again. You could call it similar to Bernie Madoff. There's overwhelming evidence that they have done this over and over and over and over. David Jensen will tell you right now in London that there's 2 billion ounces of paper contracts that could stand for delivery backed by a 140 million ounce float. What could possibly go wrong if everyone says we want our delivery? Maybe that's why they're T plus 8 weeks. All I'm simply saying is this. We can look at technical analysis. We can look at macro thesis. We can look at all of this stuff, and it's all valid. But to me, the only thing that really matters is who is doing this at this level. At this level, when you see hundreds of billions of dollars coming into the United States in the last 15 months that we know of, in terms of gold and silver, just right into the COMEX, someone's taking delivery of it. At that level, do you really think that these people do it just for the heck of it, or do they know something that maybe we all would like to know? At that level, I would argue they're not doing it just for the heck of it. So to me, that's really what I see. Huge deliveries painting a theme of something much bigger, I think, than what the mainstream media would tell us to expect or to believe.
Andy Schectman dives into the Genius Act, a transformative new law set for 2027 that could eliminate traditional checks and wires in favor of Treasury-backed stablecoins. Andy explains how this shift synthetically suppresses interest rates while funneling massive profits into gold, potentially reweaving the metal back into our monetary DNA. Is the U.S. government quietly preparing to peg the bond market to gold by July 4th, 2026? Watch as we explore this radical plan to devalue the debt and reshore American manufacturing.
Look, the United States government reclassified silver as a critical mineral last month, right? The European Union did it at the end of 23. China in November came out and said, all our domestic supply, they're the second largest producer of it in the world. It's going to be kept here to prioritize domestic needs. And then in retaliation, perhaps, to the U.S. saying it's now critical, they said, fine, we are the largest refiner in the world. We're responsible for refining 70% of the doré bars. We're going to restrict exports. Well, do you think that has anything to do with this new smelter project that the Trump administration is embarking upon for $7 billion or whatnot? I do. And I do believe that whether it be the Exchange Stabilization Fund bringing in all of this gold and all of this silver, because I believe gold is being rewoven into the monetary system. And we can discuss why I believe that. And I think silver is a critical mineral, and I've been talking about that for years, that there's so much silver that is needed, largely in the form of the military-industrial complex. Copious amounts of silver needed in high-tech weaponry. So the Genius Act is a law that was passed. It goes into effect January 1st, 2027. And what it says is that from that point forward, you'll never use checks and wires again, ever. It's gone. Bye-bye. It means that anytime money moves, ever, whether you're buying a pack of chewing gum or a new house or anything in between, it will be moved via stablecoin on a blockchain network. It settles like that, like Venmo or Zelle. The stablecoins that will be the rails are backed by something. U.S. Treasuries, short-term U.S. Treasuries. So anytime money moves, if I owe you $1,000 and I send it to you, a stablecoin is created. When you receive it, stablecoin is burned. Backing that stablecoin are short-term Treasuries. Now, the first thing that does is drive down short-term interest rates synthetically and create demand for Treasuries synthetically. That's what runs the government. And not only that, it gives demand for something that is losing demand. And how do you keep rates low? Synthetically, which got us in this problem to begin with. Anytime money moves, you do that. Now, who's the primary benefactor of this? There'll be a lot of corporations and institutions that will issue stablecoins, all of them backed by treasuries. But the primary benefactor is USA Tether, an offshoot of Tether. Their CEO, coincidentally, is a man named Bo Hines. Bo Hines was Trump's crypto czar through August. Now he's benefiting from the rules that they put into place. Now, the interesting thing about all of this is that the interest on said treasuries is not transferable to you or me. Now, that makes the banks happy because people would want to get stable coins then. Instead, Tether keeps it. What has Tether been doing? Well, they have $14 billion in gold, the largest stockpile of gold in the world outside of central banks. So here's how I'm going to put it all together for you. So the Genius Act suppresses interest rates on the short term. Anytime money is moved, the interest is now being put into gold. What does that do? Pushes gold higher, wickedly devalues the dollar. What would be the first thing you would have to do? Better reshore the gold. Say it's tariffs. No, it ain't. They're reshoring all the gold. So now you got all this gold, right? And the more gold that Tether continues to accumulate, do you think that Bo Hines and Trump have some sort of an agreement? Now, here's where there's a little bit of speculation. My feeling is, yes, they do, that the Treasury will end up with that gold. But let's just take it one step further. Judy Shelton comes on my show, and she says, Andy, in no uncertain terms, when I was on the transition team, President Trump said to me, July 4th, 2026 is the biggest day of his presidency. It's the 250th anniversary of the country, and he will back the back end of the bond market with gold. Vice President Vance says we can't be the reserve currency anymore. So what do? They create the Stablecoin Act, suppress front short-term interest rates to create volume in loans and whatnot. All of the proceeds go into gold, pushing the price higher, 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 higher. The dollar goes lower, 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 lower. We can pay off our debt. We can sell manufacturing to the world. How do we get the manufacturing back? Judy Shelton says we'll peg a 5, 10, 20, 30, and even a 50-year bond. All of them except the 30 and the 50, zero coupon, zero interest rate, redeemability in gold. The more stupid you are with fiscal policy, the higher the price of gold goes. But that's what they want because that devalues the dollar.
As we enter this new era of strategic metal dominance, the stakes for your portfolio have never been higher. With the U.S. Geological Survey officially reclassifying silver as a critical mineral as of November 2025, and the Trump administration investing billions into domestic refining, the line between precious and strategic has finally vanished. This shift signals a future where physical metal isn't just a hedge. It's the essential infrastructure for national security and advanced technology. Are you prepared for a world where the metal you hold becomes more valuable to the government than the paper in your wallet? Share your thoughts in the comments section below. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.